Alright, good morning. Today we're doing an analysis of the dollar index and the S&P 500 futures. I would like to add the NASDAQ in here. I would like to go over some currencies and the bonds, but I didn't find the time to include it in here. So as a reasonable compensation, I am going to go live this week, or at least try my best to go live if I find the time and the opportunity. And I'll try to do it at a point where, or on a day that I can sort of further implement, or it would be like a sequel to this analysis. So for, the whoever is watching this, the audience, or my intended audience, the idea is to watch this video, and then once I go live, the audience would join the stream having had already watched this video, and then I can sort of further add on to during the live stream onto this lecture. So basically, although NASDAQ is not in here, so the couples that I usually watch is dollar, ES, and NQ, and so didn't get the NQ in here. And I would like to go over bonds and a little bit of the currency market, but it would stretch this video too long, so it would take way longer to even get all of that in here, write down my notes and observations. But yeah, so without further ado, this is the 22nd week of the year. We are looking at this. Currently, it is 9:23 p.m. Eastern Time, and markets are open. It is Memorial Day today, so happy Memorial Day. Anything else? No. So here is the dollar index monthly chart. Hopefully you can still hear me. I'm going to pull out my notes real quick and just try to set them up in a way where I can get close to my mic. No. I do want to spend the remainder of my day, I don't know, either cleaning up or watching a movie and sort of just, going through my charts while I do that and just organizing them. It's kind of a mindless task. I won't be trading. I won't be, doing any analysis. I'll just kind of be removing, basically going through my object tree and organizing that. So it's a pretty mindless task. But yeah, if I do sound like I'm in a rush, it's probably because subconsciously I am. But I do have all the things I want to go over right here on my iPad, and all my notes using my weekly template. So nothing will be missed. It's just that I might speak a little faster. All right. So here we have the monthly inversion fair value gap, which originally formed as a SIBI during the month of August. But as you can see, we're far below that. So currently, basically just looking at how the market has reacted to that inversion gap, my first expectation based off of what I see is I'd expect for that, obviously, right now, because the way we've reacted off of it, I'd expect it to act as inversion, but more importantly, sending us lower below the April monthly low. So that's right here. And so I'm studying the quadrants on the wick right here. These are the quadrants formed on the monthly April's monthly candle. And so I have it from the low to the close. And it should actually be the other way around. That is my mistake. I did fix that later. Should be fixed later on, but imagine this is 0.75 and then this is 0.25. That's really the only difference. And then this would be 1 and this would be 0. And that's just kind of me trying to keep my notes and annotations as clean as possible. But yeah, so this is still the monthly chart. You can see right here that we do have a little mohawk up into the low of that monthly inversion fair value gap right here. And so the difference between the low of that gap and the high of that wick, you can see that's right here. So about 60 handles or 60 pips. And here is the weekly chart now. So kind of going a little bit faster, not spending too much time on the monthly chart. As you can see, that mohawk is right there. We traded up into this wick, failed to even trade to the consequent encroachment of that wick because we had that gap right here that immediately sent it lower. So this is last week's trading. So looking at the weekly chart, I do still favor the April 21st weekly low. That is that right here. So that is the April monthly low transposed down to a lower time frame. Considering we've also traded to the weekly fair value gap sell side imbalance, buy side inefficiency right here, that is formed on the week of April 7th. So that is the Monday of the full trading week. So that's, if you kind of hover over it right here, it should show 040725. But right here I do have that drawn out. So you can see we have the high, we have the low, and what these little Fibonacci levels or swing projections are is the multiplication of the size of this gap lower. So it's basically acting, or I'm treating it as a measuring gap just to get a further read on if we do trade lower, how far can we go. And it's not too far, but it is a little bit extra juice. So we have the negative 2.5 standard deviation at 97.798. And the reason why I am looking at the dollar going lower, besides the fact that the dollar has been heavy for a while now, it's basically just kind of reading classic order flow. I guess order flow is the right word to use. Not in the sense that, we're looking at a book map or anything, just looking at the measurements of PD arrays. All the premium arrays have acted as they should, and all the discount arrays have sort of acted as inversion, meaning that, the market traded beneath them and came back up and hit them as a premium array. So currently the market is very heavy, and that could be, due to all of the political whatever going on. I don't really keep up with it too much, but I don't want to incorporate that into my analysis. So like I was saying, we have shown a great deal of respect to this sell side imbalance. So even on a weekly basis, we are still respecting premium arrays. And so, the close of this candle, which is the 20th candle of the year, comes up, trades into that inversion gap on the monthly chart, and then closes right here inside this gap, and then the next candle opens and then gets smacked lower aggressively, right? So looks like the next stop is that short-term low right there. We do have these gradients, which I still have not spoken about, but that will be on the daily chart right here. All right, as you can see, now I don't have the weekly chart drawn, but on the daily, if you refine that same gap, we have this right here. So that's the higher up gap. You can see that the market did trade up here, right? So we have a large up close candle up into that monthly gap, and then up into the high of that daily gap. Trades lower, all right? Trades up. So basically, actually, before I get ahead of myself, trades lower, crosses over the opening price of that up close candle, and then from there, that is a change in the state of delivery. So the market then eventually comes back up into the order block and respects the lower quadrant of that daily fair value gap SIBI coupled with the volume imbalance right here. And you can see that if you mark these out, that the market or the dollar respects that volume imbalance in this portion of price action here, sending it lower. Obviously, terminus is right here. Well, terminus would be here, but we have that sell side below here. So the dollar has shown a great deal of respect to the daily fair value gap, SIBI, volume imbalance. Well, that sounds wrong. The daily, I'm just going to keep it short, the daily fair value gap, sell side imbalance, coupled with the volume imbalance from April 10th, 2025. You can see I just went over that right there. And obviously we do have the closing price that shows a great deal of respect to the high. If I were long here, right, if I were long on this candle, I'd obviously be underwater. My position would be deeply, deeply red. It would be bleeding. And I'd be fearful that the dollar is not looking too strong currently. If I were a long in the dollar, or if I were long in the dollar right now, I would not have much trust that we're going to go any higher up. So basically what I'm saying is I think this low is next. And what else? I'd favor, and my best case scenario would be a straight shot lower into the sell side. As far as into that negative 2.5 standard deviation at 97,798. That would bring me a great deal of satisfaction. So right here, Monday's trading and Tuesday's trading, my focus is this daily volume imbalance high and low right here. I want to see how we set up the stage for a run lower into this sell side. Should we get any animated, my eye falls to the negative 3 standard deviation, but that's only and only if the dollar falls aggressively lower for whatever reason. Otherwise, I'd be pretty content with the negative 2.5 standard deviation right here, and that would be good enough for me. But the way I see it right now is that, I don't think that, not that I don't think, it's just that, if we do go all the way down there, I don't think it's just going to go here, touch that, and then reverse. I think we do have a little bit more room lower. So I'd be measuring that negative 3 standard deviation. Now, the volume imbalance right here, I'm going to talk a little bit about, and why I favor it is because from the monthly gradients of that April candle, not the candle, but the wick, well, technically the tail. It's the tail, but I use them interchangeably just because I don't like tail. So, yeah. The tail, if you draw the gradients on those, you have the high right here and the low right here. And like I said, I do favor this low. And this volume imbalance is lined up perfectly with the upper quadrants right here. And so I'd like to see it come up into that and then eventually trade lower. So it can go above it, but I wouldn't favor that. And here's the 4-hour chart. We do have the 4-hour tail right here. So now this is actually the tail. So we have that 4-hour tail right here formed at the 7 a.m. candle. So this candle is really important for me because the tail is inside that volume imbalance. And I'd like to see that act as resistance if we do end up making our way up into the daily volume imbalance high. So I'm okay with it trading to the low, but if we trade to the high, I'd watch that right here. And should we trade any higher as a further measure, which I would absolutely not like to see, this would be something that if it did occur, I would have to change my plan of action for the week. So I do favor the dollar going lower, but if it trade any higher, I would have to demand for it to stay below the 4-hour wick. So that's the wick right here. The 4-hour wick, 7 a.m. candle, consequent encroachment. So the halfway point right there. I'll just say 99,490. That's I could say 99,500, but I don't think it's exactly 99,500. But I'll just say 99,500 just to keep it easier on, myself. So, but yeah, I'm specifically referring to the consequent encroachment. If we go up there, I think the dollar could and most likely would begin trading higher from that point on, and that's not something I'm interested in. So, but focusing more on the downside, watch for the 4-hour fair value gap buy side imbalance, sell side inefficiency, coupled with this volume imbalance right here. So it can go down and close that gap right there with that candle's high right there. And then I expect, or once we get below it, as soon as we complete filling in of the imbalance down to the respective low right here, and then additionally we close below it, I'd really favor to see it come back up into the imbalance, bump the lower quadrant, and then make its way lower from there. So that's the plan of action for the dollar. You can see right here, we do have those levels, which also couples well with the equilibrium, or not equilibrium, the consequent encroachment of that monthly April tail. Here's the hourly chart, just a quick little zoom in. So we have the nearest swing high and swing low on a 60-minute basis, which I would keep an eye on for the week to come, but I will be maintaining my focus on the higher time frame narrative and bias in play. So these pools of liquidity will just aid in my further step-by-step tape reading, basically. It's more of like tape reading, okay? Especially the fact that the dollar is extremely heavy right now, it would be more favorable to see it pursue an objective reaching for discount, meaning that sell side looks nice. Whether it needs to tag those buy stops above 99,107 before doing so is really out of my say. So, as much as I don't want it to go up there, it reasonably could tag buy stops and then make its way down yonder to 98,694. I don't know why I said yonder, but it just came out. All right, here's the ES analysis. So we have ES, but no NQ. Sad. All right, here's the ES monthly chart. The monthly chart, right? So keeping it plain and simple, we have the April previous month high, which is typically the first measurement that I look at on a monthly chart is the previous month high, and as far as 2 or 3 months before. So, which we have already traded to. So it's kind of out of the question as a tag kind of thing. Like, it's already tagged it. So it's not like, that objective has not been booked for the current month of May. It's already been booked. And we have, the April low, but that's out of question right now, or that's out of the analysis. You can't even see the low in there. But, like I said, we have already traded to it. And we have also traded above the monthly fair value gap SIBI, once again coupled with another volume imbalance. So right here there is a difference of 1 tick between that, so I just felt the need to incorporate it, and that is on a monthly chart. So even though it's 1 tick, I just think it's important to add that into the analysis. But I do think well, let me reword that. So do I think that we trade it all the way up to the high just to fill in the inefficiency right here and then trade lower? No. Do I think that we trade it all the way to the high, are coming back as of now to the upper quadrant, and from there can continue a pursuit higher back up into 6,000 big figure? Yes, I think that's more likely. Can I be wrong about all of this? Absolutely. My main focus on this chart is a simple if and then situation to keep it short This can either go two ways. We treat the inefficiency as such, or we treat it as an inversion. So that's really the only two possibilities here. And while there is a third possibility for time distortion, I don't think we're going to spend a lot of time in this gap. It kind of has to move out of it. So, once again, to keep it short, we treat the inefficiency as such, or we treat it as an inversion. The fact that we've come all the way to the high and further above, now trading back down into the upper quadrant. If we manage to stay inside the upper quadrant, I think 6,000 big figure is likely, considering all of the dollars analysis. So that would be a risk on situation. All right, and I think actually I'll get into that in a second. So here's the weekly chart. I have the new week opening gap for both weeks, this week and the previous week. And the first low-hanging fruit objective falls at the new week opening gap low for the May 18th, 2025. That would be 59.30 and a quarter. And then I'd like to see the new week opening gap high booked as well. This is a bold statement, but I do think that the best setups will occur inside the upper quadrant of the monthly fair value gap, SIBI, coupled with that volume imbalance, and formed on the March candle. So, and if so, the previous week high is my next objective above the new week opening gap high and low for May 18th. Right? So basically what I'm saying is I think the best setups can and will occur inside the upper quadrant of that monthly inversion gap. And if we see it respecting that, and it really does start to form its best setups inside that upper quadrant, then I think it's most likely that we'll go unbook that previous week high. So right over here. And then right after that we have 6,000 big figure. So alright, speeding things up. I spoke about the daily fair value gap buy side imbalance right here. And I said how we can come back into the high and even the upper quadrant. You can see here that we popped the cherry and dug into the consequent encroachment of the imbalance. So beautiful reaction there, which led me to trust a slight bit more that the next pursuit of the ES is higher. Now, the only hurdle that we'd have to overcome is the daily fair value gap SIBI right here. This one, which I did not draw out. I don't think so. And it's also has a volume imbalance right there. So I want to see it go above and, you know, obviously come up into that new week opening gap and that volume imbalance. But first we'd have to close above it and treat it as discount inversion. That would set up the stage for a longer term price run to possibly new all-time highs. And I would like to place an extreme importance of this video or lecture here, and how one PD array can give away, almost spoil the whole theater. Well, actually, theater, I don't know. I was trying to get to say that the right way, but it's just not coming out right now. What was I saying? Oh yeah, can almost spoil the whole theater with all the BS going on with the politics, with this, that, left, right, country, this, country, that. I'm not disregarding any of it. There's obviously I'm not trying to be ignorant here, but just looking at this as an analyst, it really does seem to me that all of this is just a bunch of, or just a big smoke screen to cover the idea that we have new highs coming in hot. So what I'm trying to say is I think the ES here is bullish, and the first objective would be the new week opening gap low. And once we clear that, we have the daily fair value gap, sell side imbalance, buy side inefficiency, coupled with the volume imbalance, formed on May 21st, 2025. And then my next objective would be the new week opening gap high, right? Which from the low to the high between both new week opening gaps, that's about 15 handles plus of a difference. And lastly, if we get animated, there's room to the daily high above May 20th, right? And then finally, 6,000 even, as I spoke about previously. Just watch this right here, this daily fair value gap right here. I'm not even going to say the full term. It's kind of twisting my tongue a little bit. So just watch that daily fair value gap. I'd anticipate for it to act as a reclaimed fair value gap, even though we really have not violated the market structure of the imbalance candle. I just want to see it trade above it and then act as support eventually. At the same time, also treating the premium fair value gap as inversion. So that would be pretty gnarly of a balanced price range. Four-hour right here. Now, here's the thing. This 4-hour first presentation fair value gap in the form of a buy side imbalance formed at 6 p.m. or on this 4-hour 6 p.m. candle is the first presented gap on a 4-hour basis derived from Sunday's trading. So the market opens on Sunday and immediately trades higher with little to no disregard to the downside. I think we should reasonably trade into this gap to accumulate. Possibly, it's very possible, even some time distortion, simply because we are resuming trading after a bank holiday. But I do like this gap as a barometer, whether I'm bullish or bearish. As of now, since the current price is residing above the gap, I am bullish, but any failure to hold that gap could result in a new low, which would be out of my analysis. So just mapping out all the options here on the table, and like I said, I do favor the upside still. I did forget to put the hourly chart here, so I guess I'm just going to read off of my notes, sort of give an idea of what I'm thinking. So a pullback into the 4-hour fair value gap at 6 p.m. from Sunday's trading is a possibility, but then taking that same perspective, looking at this from a perspective of a market maker, if I was long as a market maker or trying to go long, where would I sink this to accumulate new positions? Well, I wouldn't sink it too low, and especially not or any further below the new week opening gap, because anybody from retail or large funds going short from last week's trading on Thursday or Friday's trading is under the water right now. So imagine you went short, and imagine your position is obviously short. They'd be expecting for a run below Friday's low of day. That's right here. While I am opposed to that right now because of where the market is currently, at least they'd want to see it do that, right? Now, as a market maker, I'd have to find the right price where I can find large pool of counterparty liquidity or orders and people that are opening new short positions or getting neutralized from their current long positions. So basically anything that would allow me to jump in with a heavy hand going in long and then wait for price to run higher. Reasonably, from that perspective of a market maker, I do think the consolidation here is a good point of interest. So this one specifically, If you look at that on a 1 hour chart, that is Thursdays and Fridays trading. And so it would be a good point of interest to bring price to and simultaneously sink the market below on a 4 hour basis. Right here, the relative equal lows. But we do have more equal lows inside of the upper quadrant. So sink it into the upper quadrant, accumulate here, and then from there send it up higher. So yeah, not gonna spend too much time sitting here and talking about anything else. That is basically the weekly analysis. I will try to go live, like I said, this week at least once, and I'm gonna try to make it or plan it in a way that it couples well with this analysis. So yeah, I appreciate if you watch till the end of the video. It's about 30 minutes long, and if you did like the video, please do like the video, obviously, and then subscribe for more. I am going to be posting weekly analysis every single week, and I'm also, with momentum, I'm going to be going live more often and be doing some live trading, and then I'm obviously going to be posting those recaps, those trade recaps, which are enjoyable for me, and if anyone's watching, maybe they're enjoyable for you too. Maybe you're opposed or you're waiting for the downfall, but whatever brings in a crowd. So yeah, thanks for watching. I appreciate you, and have a wonderful trading week.